Good afternoon or good morning, depending on where in the world you're joining us from. My name is Borja Gutierrez. I'm a team lead with the Emerging Markets and Finance team here with Solarplaza, and we're very happy to be able to bring you a webinar today in preparation for the event Making Solar Bankable, which will take place later this year in Amsterdam. Just very quickly, I'd like to start with a short introduction. We have an hour scheduled for this webinar, and we will be ending on the dot. So I don't want to take up too much of the time. I just want to quickly give a short introduction to the webinar and our speakers who are with us today. So as I mentioned, my name is Borja Gutierrez. I've been with Solarplaza for just under 3 years now, organizing events focusing on emerging markets. We're active with a portfolio of events in Asia, Africa, and Latin America. And as I briefly mentioned, this specific webinar is organized as a prelude to our second edition of Making Solar Bankable, which is an event that Solarplaza co-organizes with FMO, the Dutch Development Bank. And our two speakers that will be joining us today will both be speakers that will be also present and joining us in Amsterdam on the 15th and 16th of February. So yeah, love to hear more about what they will talk about today as they elaborate further in Amsterdam when we meet there as well. So just to give you a brief overview of the program, I'm going to just start with a very short introduction. I'll be followed by Jeremy Leggett, who's the founder of Solarcentury, as well as a pioneer in the industry, done several other things. I'll spend a little bit of time to introduce him later on. He'll give us a bit of an overview of the evolving landscape of solar PV with a focus on emerging markets and some of the major mega trends and some of the expectations for these markets and how he sees things evolving. And he'll be followed by a presentation by Manuel Cabrerizo. He's a managing director with Voltiq. And he will be focusing on different types of financing options that are available for PV projects in emerging markets. Apologies for the spelling mistake I'm just seeing there, by the way. And of course, we'll be ending with Q&A time towards the end of the webinar, so you will have the opportunity to also follow up and ask questions. Very quickly, just to let you know, Solarplaza, we are a global network of solar PV professionals. We work across the globe. As you'll see, we've organized events in over 90 countries since 2004. And we have a strong network of PV professionals, which includes, of course, as well as project development companies, financiers, investors, and all sort of players across the value chain of solar PV. As I mentioned, this webinar is a prelude to the second edition of Making Solar Bankable. It's an event which last year brought together 470 major global players in the PV industry with a focus on emerging markets, a biannual event. So we'll be organizing the second edition this February in Amsterdam. And yeah, both of the speakers in this webinar, Jeremy and Manuel, will both be speaking in this event, as well as, of course, many others. But of course, you can feel free to get in touch with us to learn more about this event. But this year, we're expecting to grow to over 500 participants with a good mix, a good balance of developers, investors, and financiers. I mean, our goal is to really bring together all the necessary players to get projects developed and financed in emerging markets in one room in Amsterdam. So very much looking forward to that event. In the meantime, we do also have some other events that might be relevant to you, including an event in Chile focusing on solar asset management in Latin America, Unlocking Solar Capital in Africa, the second edition of that event, and as well as a solar PV trade mission in Vietnam, all in the upcoming in the next 2 months. So again, feel free to get in touch if any of these are interesting to you. With regards to just some practical notes, if you have any issues at all, technical issues, feel free to post those in the chat box, which you'll see on the right of your screens as part of the GoToWebinar window. So feel free to post any questions or technical issues you might have in that chat box. The presentation slides will be available, will be made available to you after this webinar. We'll share that with you, as well as a link to the recordings. And I do, very much actively encourage you to pose questions throughout the webinar. As I mentioned, we will have Q&A towards the end. So we are going to start with our first speaker, which is Jeremy Leggett. But just before we go into that, what I wanted to do is launch a poll question to get a sense of who is actually joining us today. So we have a poll question right now, which you'll see pop up on your screens in just a moment, where you'll be able to basically just identify, out of 5 choices. I'm sure that there's probably, this list isn't exhaustive. I realize there's more than 5 options here, but unfortunately the tool only allows us to have 5 options. So hopefully you fit in nicely into one of these categories. But we just wanted to get a sense of, what is your core focus? Where in the sort of value chain of solar PV do you lie? Just to get a sense of the attendees which are joining us today. So feel free. You should, the poll is open right now. You should be able to make submit a choice on this question, and in just a few seconds we'll be sharing those results so we can get a sense of who's joining us today, from which parts of the world. We're actually, that won't be, I'm not asking that question right now, but I'm happy to share that with you after the webinar. So you should now be able to see the mix. So from what I'm seeing, okay, interesting. We have a pretty strong representation from financing and investment, which makes sense, I guess, since we are talking a lot, of course, about financing. And great to see also a lot of other a lot of project developers joining us, a good amount of EPC players and manufacturers. I'm curious, again, I wish we had more categories to find out about others. I imagine that there's, the legal firms, other advisory types of groups, or maybe research institutes. But anyway, we have a nice variety of people joining us. So without further ado, I would like to introduce our first speaker for today. I think you've heard enough of my voice. So our first speaker is someone who we've had the absolute pleasure to work with for many years now. He is Jeremy Leggett. He's a founder and non-executive chairman of both Solarcentury and founder and chairman of SolarAid. I'm sure many of you are familiar with these, both of these initiatives. He's a well-known social entrepreneur, author of several very influential books, including The Energy of Nations, Carbon War, and Half Gone. Has been recognized widely for his achievements. Pleasure as always to have Jeremy joining us today. And if all goes well, I should now be able to pass on the role of moderator to Jeremy. Jeremy, are you with us?
I am indeed.
Excellent. Thank you, Jeremy. And if all is going well, you should be able to go through and click to the next slide.
Thank you, Borja. Quick correction. I'm no longer chair at Solarcentury, on the board, but not chair. So my brief is to look at the solar PV landscape in emerging markets, and the we have a color problem on this slide. Should be all black. Sorry about that. But we are getting used in this industry to the idea that we're going to be the cheapest power on earth going forward. Here we can see solar plunging down in wind, gas, and coal in the 2020s. Already auctions, of course, are less than half the average price of coal in 2016, and the average solar price, Bloomberg, among others, believes will be less than coal by 2025 on our watch. Of course, we've recently had the most spectacular record break in the chain of low solar bids. Some questions as to whether solar farms can actually be built at these prices, and profitably so. But I think it's worth looking a little bit beyond just the pricing at the motivations behind some of these bids. And this record, less than $18 a megawatt hour in Saudi, comes from Masdar, which is an organization of Abu Dhabi. And there in January 2016, the Crown Prince told his people that in 50 years, the nation will be out of oil. And they won't be sad, they'll be celebrating because of everything that they will have invested in clean energy and the other manifestations of the digital age. And it's not just Abu Dhabi, of course. We're seeing really meaningful emissions targets from the neighboring emirate in Dubai, 75% cuts. Paris consistent with solar on every roof by 2030. The goal being to be the city with the smallest carbon footprint by mid-century. And everyone will have heard of the Saudi $2 trillion post-oil era mega fund, and a deputy crown prince there talking about oil as almost as much of a problem as an asset. Within 20 years, the economy being dependent mostly on things other than oil. So this is, I think, indicative of broader trends in the world, and we all know what's driving it. It's the spectacular cost down of solar PV. Here you see fossil fuel indices over 40 years, solar plunging down in terms of average normalized price among them from 2006. And analysts referring to this as the Terradome because of its resemblance to the fairground ride of that name. And here you see the exponential growth that goes along with that cost down. 75 gigawatts installed in 2016. It's going to be north of 100, bringing the cumulative installations to more than 400 probably by the end of 2017. And for those who like these kinds of statistics, in 2016, that amounts to 31,000 solar panels installed every hour all year. So what an opportunity set we're dealing with in this industry when you think of where it's going. Before we get to that, let me just stay for a minute with where this is happening. And here we see the main regional increments of addition in that exponential growth curve. And the point being that we have 24 countries now where there's more than a gigawatt installed. So there are significant emerging markets on all continents, obviously except Antarctica right now. And what this has meant is that solar last year for the first time became the single biggest sector for new global power capacity additions. And when you look at the combination with wind doing pretty well as well as solar, for the last 2 years, we've seen renewable capacity exceeding fossil fuel and nuclear combined, and reaching a total installed capacity of almost 17% and a percent of global power production of over 11. So every indication this is going to continue, of course. Renewables providing 2/3 of that new power in 2016, mostly solar and wind. And here you see solar overtaking coal for the first time if we include the retirements of coal in the year. Total renewable addition, 165 gigawatts. And looking again at where it happens, we can see the importance of China and India in the array of countries comparing 2015 to 2016. And that's the platform for now considering what we can expect going into the future. And a very recent report from the IEA, their Renewables 2017 report, more optimistic, I think, than they've been for a long time, and certainly lifting their projections from the previous year. Renewable power growing 43% in the 5-year period through to 22, and that will take it from under 12% of the global mix to over 30%. So it'll be growing at 2 times gas and coal. That sounds very impressive, and indeed is very impressive. Within that, solar PV capacity reaching 740 gigawatts in their so-called main case forecast. However, this is an organization with a few questions to answer about the historical record of its outlooks in scenarios in the World Energy Outlook. Here you see a somewhat famous diagram now of, if you haven't seen it before, of the additions that are expected against that steeply rising black curve of PV history. Not that impressive, especially I think in 2016, how you could make a curve like that, difficult to see. And you know, Carbon Brief have looked at the extent to which this trend is being broken. Of course, these are more optimistic forecasts from the IEA, but If you look at the renewables projections historically, you might expect to be looking at something like that going forward, but instead, this is the 2017 projection, solar and wind. I think we believe that as a basis for our business models in the future at our peril. We certainly believe what we're being told by the oil companies even more at our peril. This is the BP projection going forward. And you see two 20-year slabs of time compared, 94 to 14 and 14 to 35. And there's, okay, we get more renewables here, but there's little change in the annual demand growth for oil and gas, such that, you know, by 2035, we're still looking at a world with an 80% share of fossil fuels in primary energy. And we really do believe this at our peril, I would suggest. Carbon Tracker, a financial think tank that I chair, has looked at this and come up with an analysis as to what's going on, and multiple segments of the model: air quality, cost competitiveness of EVs, a whole bunch of things. When you look at the assumptions made in the oil industry scenarios going forward, you can see pretty much an overcooking of all of these compared to other equally realistic assumptions that can be made from existing data. So that report, Lost in Transition, I do recommend to you if you want a different view. And we've seen in a report from DNV just recently in September, a kind of shared view here. DNV, 1 foot in the renewables camp, 1 foot very much in the oil and gas camp, a kind of hybrid consultancy in its transition outlook, bringing GDP and population down compared to assumptions made by BP and others, and coming to the conclusion that energy supply is likely to peak in 2030. And in fact, before 2030, in 2025. Still, of course, with a preponderance of fossil fuel in the world, not 80%, but 52%. This is not a scenario that is Paris compliant, but this is their view of the future. And it's instructive to see what solar does in this. And this is very interesting. Here you can see their forecast going from 2017 to 2030, 100 gigawatts in 27, more than 500 gigawatts in 2030, and you can see where it's projected to come, and much of it is in the emerging markets with significant growth spread across India, China, Southeast Asia, Africa, Latin America, and you know that's $1 trillion, more than $1 trillion of investment between those 2 years, 2017 and 2030. A very attractive proposition indeed. Carbon Tracker, even more bullish. If you look at the assumptions as we do in the February 2017 report, Expect the Unexpected, you see global demand peaking in 2020. A steep descent for coal after that, a plateau for oil, and demand curtailed for gas. So really very different view of the future with, we argue in this report, conservative assumptions about all the considerations that need to go into scenario planning of this kind. Now, I've lost my numbers here because the slide should be black, but I can do them from memory. Of course, in Silicon Valley, we get an even more bullish analysis. Futurists like Ray Kurzweil, co-founder of the Singularity University, and of course a senior figure in Google these days, makes the point that, you know, we all struggle really badly with exponential effects. And if you look at solar, since 2000, solar has doubled 8 times every 2 years, and by 2016 had brought solar's share of global energy up to around 2%. Now, what happens if you then carry on doubling for 6 more times every 2 years, perhaps conceivably, 12 years? Why, you get all the energy being consumed in the world at the moment. And I do mean energy, not electricity, the full 400 exajoules of it. And this is extremely bullish thinking. And it's not just him. There are others in Silicon Valley who think in this incredibly bullish way. Sorry about the projection. Tony Sieber's another one, and he applies this same kind of thinking to batteries, electric vehicles, autonomous cars. According to him, Silicon Valley will make oil, nuclear, electric utilities obsolete by 2030. And indeed, resistance is futile, as he puts it. Now, I'm not saying this is definitely what's going to happen, that I share these views myself, but what I am saying is that this is possible. We cannot dismiss this. This is a scenario that could well unfold given what we know about technologies going exponential in other segments of our economy. What does it mean for solar? Fascinating things. Certainly digitalization is going to be vital to those of us who seek to make profits going forward. And I recommend a very recent report from Solar Power Europe talking about how digitalization will increase the profitability of our industry across every part of the value chain. And these kinds of really bullish views of solar going forward are going to happen at some level, because we have the constraints of climate change, and as a bevy of climate experts pointed out for us in June, you know, we can get to zero fossil fuel use, net fossil fuel use by within 25 years if we peak emissions now. But if we delay by as much as a decade, the steepness of the curve that we would need to descend is probably asking too much. So many people at this point say, well, hey, we're talking about the total phase out of fossil fuels. Give me a break. This is the real world. And I think we need to be circumspect about that as well. And in my last minute, I just briefly want to introduce the line of thinking going forward that pertains to this. I think there are three meta-narratives we need to consider. It's clear society is awakening to climate change as a significant risk in critical mass, not of course in totality, but in a critical mass. And it's also, I think, clear, we've been talking about it, that an insurgency is disrupting an incumbency faster than most players tend to appreciate. But on top of this, there is a whole meta-narrative about an incumbency facing multiple threats, increasingly in exponential threats from events which aren't always connected to the previous two meta-narratives. And these three things have to be considered in the round. And when you do that, it really makes for a very exciting future, I think, for solar. Governments are definitely talking about fossil fuel phase out. We've known that since the G7 in June 2015. Very few people expected the Paris Agreement to even be negotiated, let alone come into force. It did. It stayed pretty much on the tracks, with the Marrakesh Declaration talking about the momentum being irreversible, with the G20 communique isolating the US and continuing to talk about irreversibility in the process. And of course, civil society in the form of states, cities, and businesses lining up to tread where the federal government in America doesn't want to. And within a few days of that announcement, more than 1,000 cities, states, and businesses representing a third of US GDP saying we're still in for Paris. And solar, of course, is a vital part of all this. There's also the demographics, with the numbers of workers involved in these industries now, including in the US. And for the rest of that story, I'll stop here. The rest of that story, I would invite you to have a look at the latest presentation on my website, because I go on with that line of thinking, which I would argue has to be layered over the kind of look at the numbers that I did in the first part of the presentation. So thank you very much for that, and over to Manuel.
Thanks so much, Jeremy. No, it's really interesting. It seems every single time that I hear you speak, and that's relatively often. I've heard you speak, at regular intervals for a long time. It seems that there's new records sort of broken every time. There's new sort of reports on these issues. And well, just for those of you especially that have joined us late, we will have Q&A, and we have had some questions coming in already. But just to remind you, you can drop questions in the questions box, which you should see in your the window of the software GoToWebinar, and we will address those questions at the end. So I definitely want to come back, and there's some interesting points that you raised there, Jeremy, that I think we can discuss a little bit further later on. But for now, then, I would like to move on to our next speaker, which, as you can see, is Manuel Cabrerizo. He's a managing director of Voltiq. Voltiq also being a sponsor of Making Solar Bankable now for the next second edition. We're very happy for the support. Manuel Cabrerizo has extensive experience in structuring financial deals, not just in Voltiq, but also West LB for over 20 years now. Extensive experience in several emerging markets, with structuring renewable energy transactions from countries, as you can see in this slide, including Spain, Italy, Brazil, Chile, and Panama. And I know that him and his team are working on some very exciting developments, very exciting markets. I know a lot of those are in progress, and maybe you can't elaborate on too much, but Manuel will share with us, his sort of outlook or his overview of different types of financing options that we typically see with regards to solar PV projects in emerging markets. So I would like to now, if all goes well, we should be able to now hear Manuel. Manuel, are you with us?
Yes, I am.
Excellent. And again, hopefully you can now switch to the next slide if the technology is with us today. Yes, excellent. So over to you, Manuel.
Thank you, Borja. Thank you, Solarplaza, for the opportunity to address the audience in this webinar. This is about making solar bankable in emerging markets. And what we're going to do is go through a number of transactions that are live, have recently happened, or happening as we speak in that space. Perhaps first a word of who we are and what we do at Voltiq. We are an M&A boutique, which we do. What we do is debt and equity transactions for our clients. These are buy or sell side mandates on the acquisition or disposal of assets and platforms, and we also put together debt packages for our clients. You see a couple of transactions at the bottom of that page, and we're going to start talking about the specific deals we think are relevant for today's context. For those of you who were with us 2 years ago when we first spoke at the first edition of this webinar, this slide may look familiar. The intention here is to segment the market in emerging markets so that we can focus on the specifics of either contracted left side versus merchant deals on the right side. And then across the top part would be hard currency denominated transactions, and the lower part would be local currency. So that complexity becomes larger when you move from the top to the bottom, and as you move from the left to the right, meaning that interestingly, most of the transactions one would expect to be located in the top left corner of that graph, meaning it's denominated in hard currency and it's contracted revenue the project is getting. And as you move either right or down, or if you move right and down at the same time, you get into increasing degrees of complexity. Therefore, the number of transactions you would expect to see as you move to the bottom right corner of the graph is reduced. This is what we see now in emerging markets. What we've done here is we've taken all those sections and actually plotted there which countries we see happening and where do we see transactions. Top left obviously accounts for a large part of the activity, but surprisingly, the bottom left part of the graph is getting more and more countries into it, meaning that contracted transactions are becoming increasingly the norm, not only in hard currency denominations, but also in local currencies. Here, we have to make a distinction between those that are pegged or not pegged to those soft currencies which are pegged or not pegged to hard currencies. Some of them are pegged, and those are in the top part of the graph. Those which are not pegged or do not feature a long-term peg are in the bottom part of the chart. Not surprisingly, we don't have any unicorns. There's no. This is an obvious reason why they're called unicorns, because they're unheard of. I don't think we have seen more than one transaction on a merchant basis, full merchant basis, done in local currency. But we do have a couple of hard currency transactions which are done on a full merchant basis in emerging markets. So what we're going to do now is we're going to analyze a couple of transactions in each of these sections. So this is an example of a cow, a contracted transaction denominated in hard currency. This is a transaction Voltiq arranged in Invenergy, was our client. This was the acquisition and financing of a 70 megawatt wind farm in Uruguay, which had fully contracted power and was denominated in US dollars. The interesting feature of this transaction is that it not only got financed on a pre-construction basis through a long-term debt package by an AB structure where IIC and DNB were the A and B debt providers respectively, but that it also got refinanced upon COD by a bond issue which stretched a little further in tenor and also in leverage, and it got privately placed in the US only a couple of months ago, respecting the AB structure, so that the B lender, which was DNB, the Norwegian bank, effectively got replaced by a bond issue, which actually was oversized respective to the original size of the B loan, eating into the initial size of the A loan. This transaction got only 3 months to complete in the original financing, and the bond was oversubscribed and got placed very nicely after having achieved a Baa3 rating as featured there by Moody's. We move on to the top right part of the previous graph, HOCs, which are merchant transactions denominated in hard currency. Here we have 2 Chilean transactions as well as 1 Panamanian transaction we're currently working on. The first one is a recent deal done just 3 months ago by the Japanese consortium in Chile. It's a PV plant, 98 megawatt PV plant with a long-term finance package, and 3 Japanese lenders providing, everybody knows, they're very long in liquidity, but the specifics of this transaction were very competitive terms for a merchant deal. The second one is a similar transaction we did in Chile a couple of years ago for EDF and Marubeni. It was a full merchant transaction going for a very long term. There was no mini term, full term money, 17.5-year money for what was at the time the largest PV plan in the Southern Hemisphere and the largest worldwide operating on a merchant basis. This transaction got awarded the Solar PV deal, Solar Deal of the Year in Latin America by Euromoney Infrastructure Journal. So it was, I think it's a transaction many of you may recognize. And then the third one at the bottom is a transaction we're currently working on in Panama, where large part of the output is sold on a merchant basis. It does have PPA, it's a hybrid. And the reason we bring it up here is because this is one of the trends we're going to be touching upon at the end of this presentation of, hybrid power, part contracted, but non-contracted, not only in terms of the output kind of 50 or 40% contracted, with the rest non-contracted from the outset, but also the contracted part falling away after 5, 6, 10 years, leaving the rest of the plant's useful life to operate on a merchant basis. Next page, these are the examples of elephant transactions. Moving to the bottom left part of the graph. These are contracted local currency deals. This is where the most interesting activity is happening. Here's where you see most of the emerging markets really coming of age in terms of them being able to pull not only hard currency denominated transactions, but also local currency denominated. We see a lot more people playing in the space as we speak, certainly a lot more than we did 2 years ago when we were first speaking publicly about these transactions. And there are a couple of recent deals we want to touch upon here. Obviously, Brazil is a paramount example of what is going on in local currency. After all the troubles, investment in Brazil it's coming back in larger volumes. It never actually dried up entirely, but we do see it picking up significantly. So here we have a 191 megawatt transaction, again by EDF and Canadian. It was a fully contracted deal, but it's entirely dominated in Brazilian reals. And it features both a loan from BNDES, which is the local development bank, together with a bond issue. Debenture is a local name for the bond market in Brazil. This was the first solar power generation project financed by BNDES ever, and this is a 2017 transaction. So we do see BNDES moving into the financing of solar and wind transactions for the first time. The traditional activity having been more on the infrastructure side of things, like substations, transmission lines, and the like. Second example is an Asian example, Malaysia, another large transaction, 197 megawatt deal. This time it is denominated in ringgit, which is the local currency in Malaysia. And the reason why we picked this specific transaction is not only that it closed only a month ago, but also because it features the world's largest sukuk, which is a bond, an Islamic bond, which is it has a beauty of combining the bond instrument with the local currency denomination, which is something, as I've said before, that was entirely unheard of in many of these countries. These are very encouraging new developments. Bottom of the page, we have 3 Egyptian transactions. These are largely denominated in Egyptian pounds because there is currency risk associated to the revenue stream as you move along during the life of the asset. But the interesting part of this is to see who's playing in the market in terms of financing. You see EBRD in the first transaction together with Propark and local Egyptian banks, a very interesting mix, a multilateral, a DFI and local lenders getting together to pull a landmark deal in the Egyptian market. The second one is again IFC and the IIB, and then syndicated debt with commercial lenders, same combination, multilateral and locals getting together to teaming up in pretty even volumes, 19 million, 22 million. So there's no kind of a dominating force, and that is important for the balanced growth in the financial market like the Egyptian market. And the third one, Alfanar, is again, the reason is that we have the EBRD and we have an Islamic finance tranche with this, by the Islamic Corporation, which is always a challenge in terms of combining documentation when you have multilaterals playing with international standards, and part of a financing package that has to be Sharia compliant in these countries. After this overview, we just like to spend a couple of minutes on the conclusions, what we are seeing, what all these things tell us. And it is essentially that from a macro point of view, we have what could be called favorable developments. There's a lot of liquidity. QE is doing wonders. QE has brought very aggressive market, significantly more aggressive than 2 years ago. We see a lot of competition among equity players for assets, for good projects. Another important point is that decarbonization is pushing and it's leading equity investors to focus more and more in renewables. So they're increasing their allocations, and when we say this, it's hard to get a feel for the kind of volumes we're talking about, but we're talking about hundreds of billions of dollars being poured into renewables, so targeting the renewable energy sector. And here I would like to tie in with what Jeremy was talking about a few minutes ago. We are seeing the large institutional investors, sovereign funds, pension funds, and a lot of investors across the value chain actually increasing dramatically their allocations for renewables. So that brings me to the third point, which is more and more demand for renewable projects, certainly a lot more than actually the international markets have to offer. So there is a lack, or at least a scarcity, of good projects from the point of view of the equity suppliers, of large institutional investors. Definitely so, and we're going to discuss the reasons in a minute. And the other point I would like to draw your attention to in a macro perspective is that international markets do respond to those emerging markets where they see political improvements. There's so much liquidity in the global market that any country doing a good job on the political side and coming back to the investment community, like we've seen in Argentina with the recent change, relatively recent change in government, or like we're seeing in Colombia with the new peace deal after decades of civil confrontation, or like we've seen in Myanmar, do attract a lot of attention from perhaps some critics may say overconfident investors willing to pour money into those countries. That is the macro picture. What we see is that obviously that over competition means lower returns for everybody. So we do see equity and debt set to undertake larger risks to keep their returns, because if they stick to the business as usual kind of transactions, the returns are coming down significantly, and many of them won't be able to do that on the same basis they've been doing it up to now. On top of that, as Jeremy was also correctly pointing out, we see auctions pushing tariffs down, which obviously reduces the revenue flow and reduces leverage, and with larger equity tickets, obviously lower returns. So when we talk about larger risk, we see merchant elements coming up. It's obvious that in OECD countries, merchant elements are becoming stronger. We can see that in many countries. We've touched upon a couple of emerging markets, but in non-emerging markets, you see stronger merchant trends coming up. I will just mention the Spanish example, where 2 auctions have been run for thousands of megawatts only in this year, and which have a significant merchant component. It is hidden. It is not that obvious because the floors that the projects are being guaranteed long-term are in many cases below the market's natural floor. So there is a significant embedded component of merchant risk until you hit the floor. You are guaranteed as a project minimum revenue line. So what that means in essence is that there is a big fight for good projects along the lines of what investors still want, and that is pretty much concentrated on the left part of the chart, mostly on the top part, contracted, but we do see a fair amount of movement towards the right in the top part, so hard currency denominated transactions moving from left to right, from the contracted side into the merchant side of the chart. As to financing, not only financing in terms of debt, but I would rather say funding, because it includes also equity. We still see project finance the mainstream kind of instrument or financing technique for these projects. DFIs and multilaterals dominating the scene. we do see project bonds coming up reality, as we have demonstrated with those examples we were talking about before, for investment grade projects, even in non-investment grade countries. So yes, the international community is willing to buy that paper in even in countries that you may not have been conceivably considered only a couple of years ago. We do see insurance providers like MIGA becoming more and more active for emerging markets in order to allow those ratings to reach the threshold they are required for international investors. And unfortunately, we don't see merchant components, even in the nascent phases, coming up yet in emerging markets, but we do see that at corporate levels. So through bank leverage and perhaps all equity transactions, we do see some large international corporates taking components of merchant risk also in emerging markets. And that's why many of these bank leveraged institutions and large groups do present what on the face of it are all equity transactions. These are the trends we see for emerging markets. We remain extremely positive for the outlook in these markets, particularly for PV as we move along. And we still think that well-structured projects, as is quoted there, will find equity and debt solutions.
Thank you very much, Manuel. Very interesting overview of all these different types of financing initiatives that we're starting to see across emerging markets. Once again, I'd like to remind everyone, we have had some questions coming in, but we'll now be moving into the Q&A part. So feel free to post your questions in the chat box. I will now also unmute Jeremy. So both Jeremy and Manuel are unmuted. So you can feel free to then step in and ask each other questions if you have any. But so I'd like to start with a question for Jeremy. There was one specific thing actually that you so I think many of us who are in this industry, following it actively, contributing to the energy transition, I think we've seen some of these a lot of these outlooks that you've provided, and indeed you provided a whole wide range of sort of outlooks which go from the extremely bullish all the way down to the others that we're seeing sort of by 2035 still an 80% fossil fuel mix. I'm curious, where do you yourself stand within that whole sort of spectrum of scenarios? What do you think is a sort of realistic overview, and where do you sort of stand on this?
Yeah, I'm further over towards the bullish end. I certainly think that anyone who wants to base a business model on the kind of scenarios that we're seeing from the oil and gas companies, that's not sensible. That we're going to look back from 2030 at those scenarios, and they're going to be the butt of jokes in business schools. Of course, not all the oil and gas industry subscribes to those scenarios anymore. We've got Statoil and Total placing significant hedged bets. They haven't gone as far as some of the major utilities have. But in any event, I think there's too much risk. If you want to stick with the status quo, there's just too much risk. I guess I can't go quite as far as the gurus from Silicon Valley, and maybe that is just simply a failure of imagination on my part. So I'm kind of more towards their end of the spectrum. I certainly think this thing is going to go faster than most people appreciate. I think we can hit these Paris targets still. I think that's all part of the picture. It's not just about naked economics in energy markets. It's about significant drivers. And so I would describe myself as a bull, but not in the league of the Silicon Valley gurus.
Okay, interesting. And maybe then bringing that same question, I'm curious to your thoughts, Manuel, on the same question. Where do you sort of realistically see sort of the energy mix moving towards with regards to how much coverage we expect with renewables?
Well, it's difficult to give a number. We're certainly very bullish as well. I think we are among the financial, within the financial community, we're one of the very optimistic players. We do see, as I was saying, a lot of liquidity floating around, which is willing to get invested either in the form of equity or debt through the various instruments, say lending or bonds, or even bank leverage through all equity structures into these things. But something has to give, in the sense that all that equity is now looking primarily at contracted transactions, which are not quite say most widely available for lack of off-takers. So you can see countries like the US, where the private PPA business is buoyant, but it's hard to find good off-takers in terms of solvent who are willing to commit long-term in emerging markets. So that is something we still have to solve as a sector in order to get these projects off the ground. Of course, politics are important here, and there's a role to be played by incentives and public institutions here and there, not only creating the appropriate incentives, but also in driving policies, because in the first phases of a market, you always need, before commercial players actually take an interest, you always need to use public institutions or public instruments to create a market, as we have seen in many instances. So that is a challenge right now. It's not the lack of money, it's the provide projects, the basics they need to take off. And once the first generation of projects is done, then the others will follow.
Thanks, and that's interesting indeed, because actually, a lot of the developers that we speak to, we sort of, what we hear, and it's interesting because we hear both sides of the spectrum. On the one hand, we hear indeed that there's abundant liquidity, there's abundant sources of capital for projects in all types of emerging markets, but we often hear from project developers or others trying to secure financing or funding for their projects that this is extremely challenging. Do you think that then, Manuel, this comes down to the fact that would your answer sort of be then that maybe the project simply isn't bankable? It's an issue of the structuring of the project rather than the lack of access to financing?
It's mostly the volatility of cash flows. I mean, if your revenue is subject to volatility because you're selling on a pre-merchant basis, what you need is an established market with a long record, perhaps decades, you can trust on. And many of the emerging markets do not have those pool markets and are dominated by a single utility. It's a monopoly, it's state-owned, and that's not a market. Okay, so you can't be selling your power on a full merchant basis from your project into that market, because there's no way you can make a reliable projection, embedding any kind of risk. But you can't just rely on it. Okay, so as an investor, you are not going to put money in that project, your equity in that project, and as a lender, it's very difficult to believe that that project is going to make anything like a stable cash flow going forward over the next 20 years. That is the big problem. So you need off-takers, you need the people to buy the power from that project on a long-term basis to give you a certain level of reliability in terms of the volatility of your cash flows. That is what I'm talking about. So unless there is a significant push in PPA off-takers, the probability is that the sector will the progress will be relatively slow as we move on. And it's not a problem of lack of liquidity, but that liquidity needs to invest in those projects, needs volatility to be reduced.
Okay, thanks. And coming back to Jeremy, so with regards to sort of these positive scenarios, one of the typical things that we hear a lot of critics of renewable energy in general is, of course, the intermittency issues that come with renewables, solar in particular. Of course, energy storage is then pushed as a sort of a way to ensure a stable, renewable energy grid. Where are we in terms of storage, the development of storage, and is it realistic to have someday 100% renewable energy powered in emerging markets, or in any market for that matter?
Yeah, we're in the very early stages of storage, but here I think it behoves us to look at what we've experienced with solar, and very few of us, even enthusiasts like myself, really came close to predicting what we now see as reality in the rearview mirror. That's what happened with solar PV. And if you listen to the Silicon Valley folks, they'll say, yeah, well, we've seen this before. We've done digital. We've done any number of different technologies in Silicon Valley, and this is how it goes. They go exponential and they surprise everybody, including the practitioners. So here's the big surprise here. And the lesson from that is that battery storage may very well likely go in the same direction, and the overlap between the two it's so exciting as we're seeing in some of the projects that are just beginning to come through now. So when that cost down is fully realized, and when solar and battery and storage are fully married, with all the paraphernalia of the digital age and artificial intelligence applied to that marriage in real energy markets, it's just it's possible to be very, very bullish about what's happening. And with my own company, Solarcentury, a couple of weeks ago, we announced a partnership with IKEA on storage, and we're doing both the solar and the storage behind the brand. And we're able to bring down the electricity price in the UK with this combination by anything as much as 70%. The electricity bill, sorry, by anything as much as 70%. And the day before we announced this partnership, one of the big utilities had the misfortune of announcing that they were going to be forced to put up their retail prices by 12.5%. I think there are whiffs of the future around, and it's very exciting.
Interesting. No, great. And with regards to sort of the digitalization, sort of bringing it back to Manuel, do we see any? I mean, of course, a lot of the sort of scenarios that you're laying out in terms of financing, you sort of have mentioned, that project finance tends to be still the sort of predominant form of financing these projects. We see quite some. Well, yeah, I think a lot of the trends are amongst indeed some of these bigger institutional investors coming in, but we are talking about quite some sort of, let's say, conventional forms of financing that we've seen in other industries. Do you think that is there any form of digital? I mean, there's obviously a lot of hype around cryptocurrencies and blockchain and other types of digital initiatives. Do you think do you see any of these having a specific impact on the financing of solar projects?
Not yet. It remains to be seen whether these things are actually a new technical means or instruments for financing. I don't think solar PV will be the first sector where they are deployed. If they actually come to fruition, there will be other sectors that lend themselves much better to the first kind of test financings. A sector like power generation is capital intensive, so if you get it wrong with your financing, the project is very likely to collapse. I'm not saying that financing is not critical for other businesses. What I'm saying is that you probably want to try with something less critical. This is too close to a basic need, and you probably don't want to run experiments with power generation plants.
Okay, interesting. So it'll take a while before we really see any. No, that makes sense.
I mean, don't get me wrong. I'm not dismissive. All I'm saying is that these things tend to be around proven technology, about proven techniques, not only as technology is concerned, but also financing techniques. So, we're talking about conservative people putting a lot of money into these projects, both equity and debt. So, the financing community is not very well known for being extremely innovative, if you know what I mean.
No, indeed. So yeah, but yeah, no, curious to see indeed what types of, but it's interesting. We obviously get a lot of questions about sort of blockchain and these types of initiatives, sort of digitalization in general, and how that might impact. So it's interesting to get your perspective as a financier in regards to this. We do have a hard stop in 1 minute, but I want to ask just two more questions. A very quick one for Manuel. And that's our merchant transactions only bankable in regions where active wholesale energy markets already exist?
Yes, definitely. I mean, you can't sell your power in a pool market that is non-existing without a track record, as I was saying, or that is manipulated by one or very few players. Monopolies, oligopolies do not qualify for merchant deals.
Okay, thank you. And for Jeremy, and last question, as I know we have a hard stop essentially now. Jeremy, with regards to sort of a lot of these scenarios that you've been discussing, one of the key questions that I get a lot of the time is in looking forward, and here we're looking, well, let's just imagine it could be a 5, it could be a 10-year sort of time frame, but we're seeing. Do you think that we'll see, I mean, what types of stakeholders do you see becoming major players in the solar market? Do you, for example, see sort of more of the oil and gas companies coming in? Do you see the sort of Apples and Googles or other large corporates of this kind coming in and taking a serious, who do you see as the sort of major players of the future in the solar PV world?
Well, I think it's going to be both. There will come a point when all this becomes so blindingly obvious that people are going to have to pitch in. And it will be tough for the oil and gas industry. And the utility industry has flipped in pretty large numbers, within the last few years. All that started in 2014 with E.ON, 180-degree turns in their business models. As I said in an earlier question, some of the oil and gas companies are taking out hedge bets. Others are digging in and going down with the ship by the looks of it. But I think that they will all change because we're seeing real megatrends here that will become increasingly obvious. Meanwhile, you've got the big Silicon Valley players who can use the platforms to create the new businesses and do the Apple's already applied for its license as an energy trader, so. Google and Apple have both invested for $1 billion. I don't know what the latest figures are. So yeah, I mean, these guys are going to go as well. So it will be a feast of competition in quite short order, and very, very difficult to pick winners, I think.
Yeah, very interesting indeed. I think it's going to be very exciting times in the next, even months. Like as I said, it's incredible to see your presentations and see how quickly things are moving. And as I mentioned, literally, I think every single time that I've heard you speak, Jeremy, you've announced some new sort of world record-breaking initiatives, such as what you mentioned here in terms of pricing in Middle Eastern PV projects that we've seen in recent weeks, months. So very, very interesting. I'm sure that a lot of developments will happen between now and February when we see each other in Amsterdam. So very much looking forward to elaborating on this further with both of you, Jeremy and Manuel. Thank you so much. We have now gone officially overtime, so let's cut it short. There's a few questions we didn't get a chance to answer, but feel free also after this webinar to share any of your questions with me. Again, Jeremy and Manuel will both be with us in Amsterdam in February, and I hope to see many of you there. And if you do have questions, feel free to get in touch with me, and again, we'll share these with you. So thank you, Jeremy. Thank you, Manuel. It's a pleasure having you both with us.
Oh, it's our pleasure. We thank you. We thank everyone for listening and attention.
Indeed.
Excellent. Thank you very much, and good evening or good day to the rest of you. Thank you.
Thanks very much.